Hi there, it's time for Wyckoff check on AI, payment, and real-world asset cryptos. And this is a speedrun session that I'll go through these ideas very quickly, both Wyckoff and potential trend change. If you're new to my sessions, these are the 3 key items I'll cover. And these are not financial advices, these are just for research and education purpose only, and for discussion with the asset tech community, including yourself. So if you haven't subscribed, it's time to hit the button. So these are the 26 assets that we will cover during the speedrun session. Let's start with the very first one. Obviously, this was covered just earlier with its dedicated session for XRP. We'll start with DEXE, BDX. So DEXE currently still around the upwards of the distribution. Not sure whether it's going to come down for an automatic reaction yet, okay? Because sometimes it happens in a way that it has a pretty flat top, like what happened over here, before it comes down for an automatic reaction. However, this is where it is now, during the distribution cycle. So in the earlier list with the 26 assets, the red ones are still within the distribution. The orange ones are early stage accumulation, and the yellow ones are the late or mid stage accumulation. So DEXE, if we go to the daily chart, is still traveling along the ascending channel. So it is still climbing on the stronger side, just that it's now really testing, whether it's going to go back to the weaker side of it. If it really drops back to an automatic reaction, and like if it really goes that bad that it goes down below the yellow key level, that's around 8 cents 70, there's a chance that by the end of January it's going to go far outside of the uptrend, right? However, if it's like more neutral, it's continuing to test the green 0.094 like what it did just yesterday, all right, then eventually it may reach to the point where in mid-March it's going to challenge this triangle, and whether it's going to fall below the support of the uptrend, we'll find out by near the end of first quarter. If, like I said, it stays here for a very long time, all the way into April, which is or even May, which is very, very hard, I would say. Not that it's impossible, but it's pretty hard to stay there for almost 6 months. By the end of May, it will eventually come to this point of trend change confirmation again. So how it is going to happen? Looking at the volume over here, it actually kept climbing, right? But at this point, especially the past few days, with this kind of high volume, even over the period of Christmas, there was clearly quite a lot of change of hands. Look at these wicks, both top and bottom, while the body remains very slim. That means the bulls and the bears are exchanging hands very rapidly during those 10 to 12 days period. That's, I would say, be careful of the fluctuations to come after. So that's for DEXE. Next, we've got Talcoin. So Talcoin, far into the distribution cycle, currently, not dropping to as low as the previous sign of weaknesses back in October or June. I previously said there is a chance that it may be reaccumulating and come back to challenge somewhere around or above the purple key level of 0.009. That's the positive scenario. It may not happen. It's not a must for a second test or an upthrust to happen. So if it doesn't, then it's likely going to eventually come to the accumulation cycle. But we have to wait till the point it goes lower than the green key level of 0.0028 or even like 0.002 to the yellow key level. That's where the accumulation started, during 2022-23 as well as summer 2024. Of course, sometimes it can start accumulating higher, but we have to look at the pattern and the volume to decide what's going to happen. Alright, now let's get to the daily chart and see those potential trend change confirmation. So this January 10th, it's a pretty optimistic thinking, right? Because currently it's trading on the weaker side of the channel, and if it has to break outside of this channel, outside of this downtrend by 10th of January, that push has to be very high, because just 5 days ago, on Boxing Day, it tried to go above the red key level of 0.005, but then you see this heavy rejection by the bears. Alright, they said it's not time yet. Let's go back to below the purple key level, and that's where it is. Finding support at the blue key level of 0.004. If it stays range bound between these two key levels, by early February, we would be able to see a potential trend change confirmation outside of this light blue box at least. Alright, that's for Telcoin. And then Stellar similar. However, it dipped a little bit lower, so it definitely has reached the previous sign of weaknesses level back in March and June 2025. Alright, and it's currently trying to find support at this orange key level of 20 cents. If it rebound to say the yellow key level of 24 cents 50, or even the long-term playground ceiling, getting rid of one word so it's easier to say and remember. So this white box, the long-term playground, tracks the price all the way back to 2017. About 70-80% of the time, the price have been trading within this range. So either 24 cents 50 or all the way to 28 cents 50 roughly. That's a potential, sometimes people call that a relief rally, okay? That's where the potential LPSY last point supply would come out. It's not a must for that to show up. If that's the case, then it's going to enter the panic sell whales buy period, the preliminary support stage. People are probably going to, sell quite a bit while the whales silently gets in. Of course, we still have to observe one more possibility. That is, it's starting accumulation around the current level of 20 cents, because October 10th dropped to somewhere near the center line of the long-term playground. So the accumulation may start at a higher level compared to what happened back in 2002-2003. Alright, and if we go to the daily chart, the price is still trading on the weaker side of the channel. Positive case, by Jan 20th, it may travel up to this triangle and break outside to show us a trend change, or we probably have to wait till February. If it climbs above the 24 cents 50 level and travel sideways by then. The current more natural or neutral case is that by looking at the volume, it's clearly been lower, but it was also the Christmas week. So be careful when we get into the new year. The volume starts to climb again and then it drops below the orange. Let's say as a neutral scenario that it continues to trade range bound between the 20 cents, the orange key level, and the yellow key level of 24 cents 50. It's heading towards the end of first quarter before trend change confirmation comes in. If you say, let's be more conservative and pessimistic, if it challenge the level that October 10th came down to test, this white dashed line over here, that's the level at around 16 cents 80. By then, we will have to wait probably till near end of April to see a trend change confirmation. Alright, so first step is for this to go to the strongest high, stronger half of the channel. Next is to see which particular trend change confirmation time point it's going to head to. So that's for Stellar, and that's the accumulation cycles project. Now we move on to those projects that are, sorry, I wasn't in the chart view. I hope I haven't blocked any of the things that I covered. If I did, let me know. Just to quickly recap those accumulation coins, BeltX still at a pretty high level. Breakout time point near the end of Jan comes first, and then mid-March and late May. Tailcoin a little bit steeper, or a little bit deeper down than BeltX, and Jan 10th, the positive scenario. End of Jan, slightly positive. Early Feb, the current situation. Late Feb, still likely, because just less than a week ago we were at that level, and eventually by around middle of March, that's the assuming it's going to travel sideways to those points and setting an LPSY. Stellar, we just talked about, near end of Jan, end of Feb, and end of March are the dates if the price travels towards the stronger side of the channel. Now we move on to those that are in accumulation. So early stage accumulation, the very first one, DEXE. Here, the selling climax seems to be showing up. The volume has been trending down, and last week we've got a little wick from the bottom. Alright, these are good signs. However, I'm also cautious that we are around the Christmas and New Year weeks. So these 2 weeks may just be the silent before the storm. So I won't declare it's the selling climax. The panic over period is definitely here, has definitely arrived. Let's let it develop for 1 to 2 more weeks. When the automatic rally finally appears, then we can confirm that this panic over stage is done. However, I shared many times before, even after the panic over period, the subsequent test of shaking out paper hands and keeping only the diamond hands would come lower. Sometimes the price will dip lower than the selling climax. Take a look at what happened over here. Right? It dipped way lower before it eventually start to climb. So while we are waiting to see this to come, notice where October 10th tested. And when we get to the daily chart to look at the potential breakout timing, obviously the 23rd was missed. Alright, it confirmed over there that it's going to come down, bouncing off from the ceiling of the downtrend. Then, next, we've got 28th of December, which it did confirm that it broke out, alright, on the very day that the line crosses. So if we look at this trend, just to make sure we can't really adjust this box any further, because sometimes this is not exactly very tight to every single candle, then there's still room to slightly nudge it a little. And if we do, even if we do it, currently it's kind of bouncing around the ceiling. Alright, if we tighten it up, just to double check, including this wick just happened on the 19th. Alright, once again it's edging towards this, and we're just 2 days away from this cross where it shows 1st of Jan, and this is going to, we've got this date originally, it just moved up by 1 support line, and this moved a few days later. It's just we're shifting the dates to one level up. Not that there's something huge that changed. All right, so let's adjust all these, because once we adjusted the channel box, we have to make sure everything else aligns. Now that points to early February. Okay, so it's just basically getting a double confirmation. Initially, when the box was over here, we've got that December 28th confirmation. Heading into the new year, if this continues to travel sideways, then we don't really have to adjust the box because these boundaries are pretty solid now. Alright, so just 2 more days, we'll be able to know whether this is going to get rejected and continue with the downtrend, or is it really changing trends to sideways, and that may be really the panic over period appeared. Next, injective protocol. So for injective, similar, around the panic over stage, still pending for confirmation. Looking at the volume of the previous 3 weeks, those few weeks of red, plus a very low volume white, it seems like it's not over yet. So that's why I say it may be over, but we still have to wait for a little longer to confirm. And similar to DEXE just now, for injective, it's also getting very close to the breakout area. Currently, it's still fighting along the ceiling. So this time, this channel box is pretty tight. You see these candles, they are pretty set within the boundary. So I'm not going to adjust this one. However, sometimes it does a false breakout and then quickly returns into the downward channel. So again, let's see whether it's going to come back down within the next few days. If it doesn't, if it continues to trade sideways, then that's a good sign, at least to start with. This week and last week, again, Christmas week, New Year's week, very low volume. Let's see when we get into the new year whether that's going to change. And if it really finishes the selling climax and gets into the automatic rally, that may trigger a little bit of volume to come in to set the trading range top. Not necessarily going all the way to the yellow key level of 7.67. It may end up around the 6.03 orange key level. So it all depends on how much money comes in. Alright, that's injective. Next, we've got quants. And quants, previously I shared that it's potentially getting into the preliminary support stage where the panic sell is around and the whales are probably coming in. However, it's crossing the timing of Christmas and New Year. So these 2 candles that we have is a little bit tricky to interpret. Alright, look at what happened over here during the last 2 weeks in December 2024. Right, those volumes were higher, and then those 2 weeks suddenly dipped, and eventually when we get into the second week of New Year, the volume starts to come back in. Alright, so it's still a question mark whether it's going to reaccumulate and comes back instead of entering the accumulation. Currently, my assumption is it's probably getting very close, if not already, into the accumulation. But it's not 100% sure yet until it shows some signs of pattern or volume that confirms that it has got into accumulation. Looking at the trends, it's still within this sideways trend. Not until it breaks this orange key level of around $70. you can say, what if it's actually a downtrend that started back in July? All right, let's assume this question is true. Let's draw this box over what's been happening. All right. Just to make sure the wicks are touching. Okay, let's assume this is the mega downtrend that started back in July. If it does come down, it's of no surprise, especially like I said in the beginning, if it really comes to accumulate. Last time, back in 2024 summer, it went all the way, the lowest point, even after the selling climax, it went all the way to the white solid line, where the long-term playground bottom is. So this was around $50. We're still $20 away from it. Okay, so even if it closes, if it comes down just to where that previous accumulation cycle closed, that's still $60, still $10 from where the price is now, and roughly about 15%. Okay, so here, let's draw the center line as well, assuming that this is really the continuation of the downtrend. Alright, the center line doesn't have to cut the box exactly in half. The more important thing is that it cuts through the area with most dense candlesticks, heads and tails. Alright, so currently it's still trading on the weaker half of the downtrend, if this is really a downtrend instead of a sideways. Okay, that's for quants. And in terms of RSR currently in the early stage of accumulation, also around the stage where the selling climax or the panic over period is showing up. Similar to the earlier projects that we talked about, seems like it's getting outside of the downtrend finally. All right, previously we said somewhere close to or before mid-Jan. It looks like it's taking a move earlier than that. Just that, like I said, the caveat here is that it's still technically edging along the ceiling of the downtrend. So if it does come down, look at the volume just 2 days ago on 28th. That was pretty strong, but the candlestick body wasn't that crazy. So there is a chance that a lot of change of hands happened on that day. Just that the bears wasn't successful in pushing the price down to the downward channel, including yesterday. But still you can see the wicks are all from the top, meaning the selling is still pretty strong even today. Alright, let's keep an eye on and see whether it's going to come back, and eventually, when we get closer into the second week of January, things will really be confirmed that this downtrend is over. Next, we've got maple syrup, maple finance. Alright, previously I said, it looks to me the panic over is done and the automatic rally has happened. This red cross this week, the bulls and the bears are basically agreeing. Alright, let's take a break this week. It's Christmas and New Year. Let's not go too aggressive. That's why it's taking a pause. And similar to the other ones, we said there's a chance for this to break out, but unfortunately it hasn't happened yet. It's still edging along the ceiling. So let's see whether we can make a slight adjustment without breaking the entire thing. Okay, just by a little, and these wicks are still pretty tight. so that's good. Essentially, it's still trading along the ceiling. You can consider that a rejection on the 27th. So 3 consecutive days of red candlesticks, rejecting it both from the ceiling of the downtrend as well as the blue key level of 33 cents 30. So the next date we have to look at is mid of Jan, near the 14th. It can come earlier, or it's going to get rejected and go challenge the lower level that it already did at the beginning of December. Alright, the green key level of 23 cents 60 is in the level that the price hasn't come down before. So looking at the big picture, it can definitely come down for more tests. Alright. Next is TRAC, original trail. So TRAC, somewhere around the preliminary support stage, where the panic sell and whales get in, happen. Just that, again, it's crossing the Christmas and New Year's week, and the volume has been pretty low. However, those long wicks from the top indicated the bears have been working very hard to push the price back below the 0.40 light blue key level. Alright, if it really is still continuing with the panic sell period, the sell and climax, the panic over stage, will take time to show up. Whether it shows up around the green key level of 35 cents, or like last time during March, April this year, at around 30 cents, it's probably going to take a couple of weeks to develop. And when we go to the daily chart, the price is still trading along the weaker half of the downward channel. Right, the dates that we previously talked about, it's very late into the second quarter, about the end of April, mid-May, as well as early June. Assuming the price still stay below the current light blue key level of 40 cents, whether or not it's going to test deeper levels, it's too early to tell, because look at what happened just in March, right? It happened with the selling climax where the panic over, but the subsequent paper hands, diamond hands test went lower than the yellow key level of 30 cents. Okay. Next we've got XDC. XDC, again, looks like the panic over period has arrived, with quite a bit of price climbed last week to challenge the light blue key level of 5 cents 20. That may have set the automatic rally, the trading range top for the accumulation cycle. This week we got a little bit of rejection from that same light blue key level 0.052. However, sometimes this may take a few more weeks to finally evolve or fully form the trading range top for the automatic rally. Subsequently, there will be more tests. Sometimes, very exceptional case that it took a very quick dive and then quickly rebound up to a new distribution, but that's, like I said, rare. Potential breakout time point. 1 near the end of January, around the 23rd. The next comes around 24th of Feb. You see the rejection yesterday from both the light blue key level of the 0.052, and also it closed below the ceiling of the downtrend. So that's a dual resistance working over there. Just to make sure, because I see the current evolvement, those two dates may have to be adjusted. Let's assume we're going to make this a less fierce or less deep decline. We've got this reference point, and this reference point just yesterday, and let's adjust the center line as well. Now this date has moved to 31st of Jan. Alright, and this obviously, let's go on further into the first quarter, near the 8th of March, the International Women's Day. All right. Okay, that's the XDC. Next, we've got ZBCN, CBAC. So here, again, it's a very tricky situation. It's kind of transiting between the distribution into accumulation. It may be, it may still be the panic sell and whale buy period. There's no history for CBAC to let us, give you reference how it looks like. But sometimes it does happen in a way during this particular stage that these kind of candlesticks show up for maybe a month or two before it actually declines to the selling climax. Again, these kind of young coins, it is a very big guess, whether this is really a pattern of it, because the price profile of these younger babies are definitely not fully defined yet compared to their older siblings that's been around for almost 10 years or getting close to 10 years. Some definitely over 10 years, those teenagers. So here, this currently still staying above the center line, so still trading along the stronger half of the channel. These dates, Jan 18th, the pretty positive scenario that the price bounce up to above the blue key level of 0.003, or the slightly positive scenario that the price goes up above the light blue key level of 0.0027. Those 2 points to potential trend change confirmation by 18th of Jan and 11th of February respectively. If, however, the price continues to stay below the light blue key level like where it is now and above the green key level of 0.0021, we probably have to wait till near mid of March. The date is pointing right now is around 11th of March for a trend change confirmation. Just that the bigger picture tells us if it really comes down to show us selling climax, it's probably even longer wait would happen. But it's a few months from now. We can definitely add those dates when we get closer. Okay, and after CBAC, we are moving on to the ones that are in the mid-late stage of accumulation. The very first one is Algo. So Algo currently in a very deep test phase after the sign of strength that appeared back in mid-July. It's over 5 months now. This downtrend that's pretty long and deep went all the way to somewhere, it came around the summer all the way into autumn of 2024, as well as the 2023 accumulation. Right, so it's not a level that's new. It's not a new all-time low like in other projects, but it's definitely testing the ones that's way deeper than October 10th went. All right, so it can be just a test or it can be a spring. It doesn't matter. It's just a name difference. To me, whether we call that a spring or a test, and then immediately follows with an uptrend going all the way to the buying climax, you see how rapid that was during 2024. In those 5 weeks, it reached the peak already. 5 white bars. All right, it can be that quick. And next, the daily. So these dates, assuming that this test is really over, looking at the volume, it's been pretty stable around 7-8 million level. And if it really does find support around or above this 10 cent red key level, is pointing towards somewhere around 13th of Jan for the very first case, if it stays above this yellow dash line that is currently trading above at around 11 cents. However, if it comes back down to challenge the red key level like what it did on the 19th and 18th, the trend change confirmation may come a week later, around 21st of Jan. It definitely has missed the 29th of December date, the previous one. That's why I said these dash lines may provide intermediate support, but they probably won't last. And then if it comes with the pessimistic scenario that it goes below the red key level, then we have to wait till the beginning of February for the confirmation of trend change to come. So remember I said 2023, the price went way lower than, not very low, not like way lower than the 10 cents. It's at around 8 cents 50, but still lower than the red key level and staying above where the bottom of the long-term playground is. Next we've got AMP. For AMP, again, very deep test to the level very close to where 2023 accumulation tested. That spring over there that led to the subsequent months in this case of climb towards the buying climax. Haven't tagged those, but that's the one over there. Look at how different it is from this point to the climax. It took 140 days, 20 weeks in total. What happened to Algo was only 5 weeks. So it really depends on how money has been rotating across daily. Again, looking at the downtrend, it's trying to stay above the center line. It's just hovering around, not particularly higher or lower. I would say 2 weeks ago it was definitely above, but this week it's like it's staying slightly below the center line. So going back to above the red key level of 0.002 and challenge the January 21st date, to show us trend change, it's getting slightly difficult compared to the 26th of February date. Alright, if it really comes down, we probably have to wait till near the end of Jan in order to see a trend change. But who knows, if the smart money really wants to come in earlier in AMP, then they can do this for AMP first and then do the other ones later. After AMP, we've got RWA, AR. AR, not as crazy as the other guys. The leg going downward is still long, but not very steep or not without, there was at least a sign of strength just in the beginning of November. However, it does do something quite similar, as this shakeout is definitely going below the playground zone bottom that's set by 2023 again. However, October 10th for RWA set a lower low than 2023. So that's why currently over the course of past 3 weeks, including this week, we are ending up over here. Daily. We talk about if it successfully climbs above the white solid line, which it didn't, and there was quite a bit of selling 2 days ago. The volume was pretty high. Yesterday volume was still higher than average for the past week. So it seems like the bears are saying, let's stay below this white solid line, the bottom of the playground zone, around $3.60 for a little longer. If, however, some positivity comes in, if you ask what would happen if it successfully climbs above the white solid line, still being suppressed by the ceiling of the downtrend, then it's probably going to take another 20 days when we get into 2026 before we get a trend change confirmation. However, if it really comes down to challenge this October 10th level, we likely have to wait till the mid of May or sometime between end of Jan to mid-May to break out, because there's just no reference in history of R-wave, just one day of record that R-wave was within this range. So is a big question mark where this is going to find an intermediate support and then break out. By then we will know if it's forming, getting multiple bounces along a sideways trading range, then that may be a hint that it's going to break out sooner. After R-wave, we've got CSPR. So very similar to the other ones, that is coming for a very, very deep test, even deeper than any time in its history. So this paper hands diamond hands shakeout last week when it was about to challenge the bottom of the long-term playground. It got heavy rejection. Alright. Currently it seems like it's building a bottom around the current level of 0.0044. Let's see whether that's going to hold. It did show some sign of strength back in May, but that was like half a year ago, over half a year ago. So I definitely want to see something stronger that it comes to challenge the yellow key level of 0.024. Not only that, I hope to see the candlestick closes close to that yellow key level. Not like what happened in May, that it went back all the way to close around the orange key level of 0.016. Looking at the daily charts, alright, what's happening right now is that you see the heavy rejection on 23rd, right, when they challenged the ceiling of the downtrend as well as the bottom of the long-term playground. We did talk about that for the positive scenario, the optimistic scenario. If it really comes up and challenges this white dash line at around 0.005, then we can look towards 13th of Jan, somewhere before that date, for a trend change confirmation. However, given that rejection, it seems like it's the more likely case is to head towards the end of Jan or the beginning of February for that trend change confirmation to come. Not saying that this is the only scenario, because with some capital come in, the 13th of Jan is still reachable, is still within reach. Alright? Going down further, there may be a chance, but 3 times now, that it seems like it's trying to build a bottom over here. Let's hope the bulls are successful around this building the bottom challenge or building bottom quests. Alright, that will set a new reference for us or for CSPR. Alright, and then we've got FET, Artificial Superintelligence Alliance. Again, the testing level lower than the selling climax, the panic over stage. That was around the orange key level of 34 cents. Currently the price is lower at around the red key level of 19 cents. However, the 19 cents was in the lowest range back in 2002-2003 accumulation cycle. There was more like a subsequent testing period back then, in summer to autumn 2023. If it successfully bottoms out over here and head back to the sign of strength, best comes with volume, like what happened in early November, but not having a long wick at the top. That's the best picture we would hope for. And then after sign of strength, don't think it will go all the way up. Sometimes it does. It tracks back just a little. Let's say if it shoots over the light blue key level 80 cents, sometimes it may track back around that range and build up a sideways trading and then go up. But sometimes the whales will let it drop and goes back to the previous testing levels. For daily, it's getting to that point now, and this box, I'm trying to see whether we can still adjust this a little, because I see some space around the wicks. So if we nudge it slightly, it clearly is trading along the stronger half of the channel. Just that we said somewhere around the beginning of 2026, after the adjustment, it's around the 3rd of Jan, just 2 days later than the original projected date of the 1st. So the 3rd of January is the time where we potentially get a trend change confirmation. There is a dual support over here. The red key level of 19 cents, as well as this sideways trading channel. Alright, that was set by early November trading activities. Alright, so let's see when we get into 2026 whether this downtrend is going to confirm, meaning the price is going to break below the red key level of around 19 cents. Yeah. If it does, then the next support would be around, unfortunately, 6 cents. That was set over here in 2022. There is definitely an intermediate level around 14 cents, 13, 14 cents, somewhere around that, before it gets to that low. So I don't want to scare you too much, but I have to let you know there are definitely levels. There's 16 cents and then somewhere around 13 cents. But those are like intermediate levels, not like strong. It may bounce from there, but it's a bit risky. We'll get back to this because the next projected date is around the 9th of Jan. So we definitely is going to cover when we come back for the next session. Alright, after FET we've got GLM. GLM currently also around the late testing stage. It's slightly better because it came up, just that it's not, I'm not considering that a sign of strength yet. One, the volume was lower than even the automatic rally period. Two, it reached a level much lower than, or closed 2 levels lower, 2 key levels lower than the automatic rally. The green key level of 25 cents and the light blue key level of 30 cents. So I'm waiting for the sign of strength to show up. At least it should challenge the light blue key level of 30 cents. Best if it challenged the blue key level of 36 cents, like what the automatic rally did. Alright, right over there. With a volume bar that's pretty high and without a long wick at the top of the candle. Daily. We talked about the potential of it dropping outside of the uptrend, and it kind of faked out on the Boxing Day or like on the Christmas Day. I do want to adjust this a little. It's not that is of a surprise if it really drops out, because it's within a bigger downtrend. So this uptrend is more like tracking one additional thing if it really does break outside of this bigger downtrend. This is pointing to somewhere around early March. Alright, this now comes to 26th of June. So you see these 2 points over here. The very first triangle points towards the 26th of Jan. So somewhere from now till then, it's probably going to continue with the downtrend, the bigger downtrend. However, looking at the volume today and the candlestick over here, the bulls are really trying hard to push it above the yellow key level of 22 cents. And if they success, the next they're going to challenge the green key level of 25, like what they did back in November. They challenged that 2 times in November. Let me adjust this center line. Alright, zooming out just to let you see the bigger picture. This downtrend probably started somewhere in July, after this sideways trading. And then it starts from that point late July and then started coming down. It seems like it's starting like, another sideways trend. However, we are, like I said, trying to confirm whether this longer or bigger downtrend is going to continue, because if we look at the bigger picture, the subsequent tests can be multiple. It doesn't have to be just one test over there, the second test over there. There can be even more tests. So it's not a surprise for it to come down to challenge the orange key level of 17 cents or even the 12 cents. That back in 2021 and before, the price went lower than the red. We don't want to see that happen, but it can, just because during the second test period in October, it did a couple of times, even in early November. Alright, so that's GLM and the respective days that we are observing. Next week for GRT, the graph. GRT, again, very, very deep tests. No reference in the history over here, since 2020-21. And this, we just hope to see a flattening and bottom building before it comes up to show us a sign of strength. So I'm not going to repeat what I'm expecting because I've already talked about it in the previous projects. The daily. Here, the line that we have drawn, this white dashed line, is still supporting the trading for after a week. Today is a bit risky. If I zoom in, you see what it is doing. Let's hope it's going to close a little bit higher within the next 5 hours. If it doesn't, if it closes below this line, and this line is broken, it may go even deeper. Again, uncharted area. If it successfully stays and travels along this line towards this triangle, by early February, around the 7th, somewhere before that, we would be able to see the bottom finally comes in and the trend change comes in. Not necessarily going up, but at least a sideways trend is better than this downtrend continuing. And currently it's still trading along the weaker side of the channel. So if I look at this, just the line a little. Currently it's going slightly skewed. So you see the rejection yesterday with quite a bit of volume, quite significant volume compared to the 28th, 27th. If it continues to come down, if you look at the center line, basically it's going to confirm by the 3rd of Jan, is it going to continue to stay at the weaker side of the channel. I usually don't look at this because it doesn't matter to me, because it's still within the downward channel. Whether it's on the weaker side or stronger side, it doesn't matter. Not until the point where it finally confirms the trend change. But, it's actually trapped within this triangle as far as you can see, right? So that's the funny part of it. Next, we've got Chainlink. For Chainlink, it has gone through the automatic rally stage and, entered the, mid or early mid stage of the accumulation. Previously I shared, if the price stays above this higher low trend line, the yellow dashed line, it extends all the way back to 2023 summer. Only October 10th kind of poked through that. Definitely it has been retested multiple times during November and early December. This is the triangle that it is heading towards. So somewhere between the yellow dashed line that we just talked about and the red key level of 13 cents, $13.10, sorry. So while it's still going through this testing period, we want to see Chainlink not to go breaking this trend line, the yellow dash trend line, because that means we have to take it out, and then the subsequent test may go a little bit wild to the south side. Not that there are no price references. Definitely around mid $11 there are a couple of references. But let's hope that it's going to come up to show us a sign of strength instead, with positive significant volume. So that's the advancement with volume stage. Looking into the daily chart, we talked about this potential date of trend change confirmation on December 29th. Obviously, it confirmed, it got rejection from the red key level of that $13.10, as well as the ceiling of the downtrend channel. So it got a confirmation that it's not going to break out on that date. The next date we're looking at is the 10th of Jan. So the positive thing that we can observe here is for 3 times, one time in late November, the other beginning of December, and the third time somewhere around the 18th and 19th of December. 3 times it has tested this yellow dash intermediate level of around $11.60. That was where the low point of June this year was. Alright, of course there was another time in April this year that it tested the second yellow dash line. Let's hope it doesn't do it, because what happened in the beginning of December with this volume bar and those 2 white candlesticks kind of showed us that the bulls are pushing really hard whenever it comes to this yellow dash line of around $11.60. Just at this time, December 19th, the push wasn't that strong. So hope that it isn't a sign of bulls weakening, but we'll soon find out when we get closer to 10th of Jan, because that will essentially confirm whether this is going to break this yellow dash line, or it's strong enough that the bulls is going to push the price outside of the downtrend. After Chainlink, we forgot LPT. For LPT, very similar picture as you have seen in the other ones, just that October 10th showed us a pretty low point that's lower than the 2023. So that's why the price still continues to test or heads towards that level to test it. When we get to the daily chart here, we talk about the potential trend change confirmation coming near the beginning of the year. I just want to adjust this box, this channel a little while we are here, just to make sure to include what happened on the 27th when it tried to break out but get heavy rejection from very close to this white dash line of about $3.70. So this line wasn't only set by the early December trading period, that particular week stayed above that 3.7 or 3.68 level. But if we look to the history, back in April, it also happened to challenge this level, and even 2023. However, that level was broken. The key thing is when the price tried to get to that level, it got heavy rejection, from the ceiling, but also because of this line. Currently, still staying below the solid white line, the long-term playground zone bottom. So that's where it is. April tested it. October 10th went below. 2023 June tested the same white solid line. So the very first hope is for this to get above the white solid line after the adjustment of the channel. Now this triangle points to the date of 5th of Jan. That's the positive or optimistic scenario for the price, with the bulls support to come up back into this triangle over here and confirm trend change by the very first week of Jan. If it doesn't, however, if it continues with this downtrend, the positive thing that is going on is that it's still trading on the stronger side of the channel. If this continues, That points to the 26th of Jan. So almost a week later than originally projected before the adjustment of the channel. Alright, that's for LPT. Next, we have near, and for that I have to hydrate a little. So here, the test for the past 3 weeks finally closes above this yellow dash line of $1.47. 2 weeks ago, including last week actually, they both come back to test the October 10th level of close to $1.4, $1.399. And either we call this a test or a spring, depending on what's going to come next. Let me remove this. At least we want the price to come up to challenge the sign of strength level that was set in November. And that's a level above, or somewhere around $3.24. Automatic rally, the stage where the trading range top is set, went higher. So obviously we want the price to challenge the yellow key level of $3.73 when it comes up. It looks like a bottom is kind of forming. Volume has been staying low. Let's hope that it stays the same and don't go all the way to challenge the 2023 accumulations range. Alright, that bottom. Still quite a bit of distance from where we are now. Almost 35% drop, I think. And going to the daily. We talk about 2 dates. 21st, obviously, it passed. And 25th, interestingly, right after 25th, it did the thing to confirm the trend change. Alright, from the previous downtrend. Okay, looking at this. From the previous downtrend, definitely broken outside of it around Christmas, Boxing Day. And now that, let me adjust this back. Well, actually, we don't need that. We just need to keep one date that it confirmed trend change, somewhere around 25th, 26th. Alright, so now what we hope to see, at least being neutral and trade sideways. Alright, even between this 1.6 to 1.4 level, that's good enough to start off the new year. And then eventually find capital to come in and bring it up back to the sign of strength that I talked about in the very beginning. Alright, let's hope for this for near and then ONDO. Again, very deep test, seemingly forming a bottom around the stage. Not that it is the lowest point if we look at what happened back in February 2024. ONDO still pretty young in terms of its history. So again, there's little reference and it's very risky. The positive side over here is that it's trading on the stronger side for about a month now. And looking at this, I think these dates would still hold for the time being. The very first date is going to challenge because it's not like it's going to challenge in the remaining of 2025, this very first triangle. So naturally it moves towards the 10th of Jan. Somewhere from now till till 10th of Jan, if it follows this sideways trend, it's going to confirm that this downtrend is over. Otherwise, if it get rejection from the ceiling of this downtrend, then the next 2 dates, if it really comes to challenge the 2024 low, we have to wait till near the end of Jan or early Feb to find out whether the trend is going to change, or is it going to create a new all-time low, even lower than what happened in the beginning of 2024. Next, we've got render. Render very similar for the past couple of projects that I just talked about, so I'm not going to repeat the same thing. I'll go straight into the daily chart if it really is setting is bottom. So there are 2 dates we're talking about. You know, all those intermediate levels, you see why I call them intermediate levels. They just don't provide strong enough support. You see the candlestick closes or get rejection from those levels, but you know, when the trend really comes in, those will be broken through within the day. What the price is doing now is trying to stay above the red key level of 1.22, and it's still, you know, range bound between that red key level and the 1.38 level. That's line over here. The sideways trading has been continuing for like about 10 to 12 days now. What we are hoping to see is that by 26th of Jan, the trend change confirmation will come in. The caveat here is that October 10th challenged at way deeper level than the red key level. So red key level 1.22, October 10th challenged the level of 40 cents. Alright, very close to 40 cents. Lower than 50. So that's why we're leaving this March 5th date over there, just in case the price comes down to challenge the October 10th level. Volume itself has been staying slightly higher than the mid of December. So when we get into the new year, it may be even higher. Alright? Just my guess. Alright? Nothing in particular. Because if we look at the weekly candles, it definitely is climbing the volume. Alright? THETA. Very similar picture, right? The big picture. Seemingly trying to build something horizontal. For THETA, it's kind of similar. The October 10th tested the level lower than the current, and that was the red key level of 19 cents 50. There's an even lower level around 4 cents. That was the level tested during the 2018 to 2020 period. Not that we hope to see that again. October 10th only challenged the point where summer 2020 landed. The daily chart is showing us the downtrend is still continuing along the weaker side of it. About 10-12 days ago, it's just broken below the orange key level of 31 cents 80 with pretty or higher than average volume, let's put it this way. Over the course of the past couple of days, especially on Christmas Day, there was quite a bit of price drop with volume. Yesterday, today, the volume bar were higher than average as well. Just that the price didn't dip very low. So that's probably some form of buying including in it, but the bears were still stronger. So this may not be the bottom. I'm just looking at the past. This definitely has an intermediate support around this level, looking at the activities over here and a bit over there. So that's why the price is currently staying around the 26 cents, 25 cents level. That's where it's borrowing the reference from. Alright, I'm just trying to show you if we get these references from the past. That's why we are seeing the price, seemingly bouncing off from here. That's a U-turn that I usually call. You see a pretty long red candle and then a bit like a cross, and then the white going up. Looking at the line chart is like a U-turn, bringing the price back up potentially. Not always happen if the bigger picture is still going down, like what happened over here. Alright, kind of did the same, but then just after a couple of days it's gonna come down. Next, we've got ULTIMA. ULTIMA, let's go back to the big picture. Second test passed, and we're still waiting for a sign of strength to come in. That leg didn't last very long. Volume is still acceptable back then, 5-6 weeks ago. But there we are. The test continues, and currently is finding the bulls and the bears kind of agreeing that the orange key level 5257 is somewhere they want to take a deep breath. The volume has been coming really low over the course of past 4 weeks. This week there's still 5 days left, so it may come closer to what happened. This is still a kind of a baby trend, the uptrend. So let's not assume that it has broken yet, because it's still subject to like adjustments that can still kind of bounce this uptrend. Alright, I'm just putting it here in case it's really breaking outside sooner, because this downtrend actually started somewhere in June. Alright, somewhere in mid-June, and then it's still going on. So if I zoom out, you see this bigger box within the, or outside of the smaller one. So let's add in the center line. Currently it's still trying to stay above the stronger half of the channel, right? You see what happened over the past 5-6 days. The price has been trading within this narrow gap between the orange key level of 5257 as well as the center line of this downtrend. So these dates are probably going to drop to a later date. So let's move this very first one. That's pointing towards the 8th of Jan. But the price has already dropped lower than the orange key level, so that's just to keep it for us for reference while it's still going along the downtrend. That's assuming it's going to stay above this light blue solid line and come challenge the orange or yellow key level. I'll keep this. I'll move this over here instead, not the green line. I want to move the box, because if it really is going through this very gradual downtrend, it's pointing towards very, very far in future before it can come break outside of this box. Alright, the earliest date I want to point to you is that's 23rd of April. However, if it does follow this uptrend, I'm just trying to give you a positive picture, because some of you always ask me in the comments, don't just show us the bad news. What if things turn better? Alright, assuming that it does. That's why I'm drawing this light blue box, just to give everybody a more balanced picture. That's 20th of Feb. That's assuming this uptrend is going to continue and it trades towards this wedge. Alright. So a couple of dates, 8th of Jan, 26th of Jan, 20th of Feb. And finally, we've got Virtual. Virtual, again, deep tests, not as low as what happened on October 10th, as well as the selling climax back in April. It's trying to stabilize along this yellow dash line of 67 cents. And if we look at the daily chart, it's just climbed towards the stronger half of the downward channel. All right, within this week. And the dates that is pointing towards doing a trend change. I am looking to adjust this box because that's not very tight over here. Now that it's tighter, the date has to be adjusted. So the very first date is somewhere from now till 3rd of Jan, not 13. The 3rd of January. That's where it pops up very high to above the orange key level of 93 cents, which is very aggressive, alright, given the very few days left. The neutral scenario that it travels along above the red key level of 67 cents, like what it has been doing over the past 8 to 9 days, points towards the 20th of January for trend change confirmation. A more pessimistic scenario is that it get rejection and continue to challenge the levels around 32 cents or 30 cents. That's the October 10th date. Alright, that's somewhere back in November 2024. Challenge, that's even lower than that. Alright, October 10th. That date would be somewhere near the middle of February, around 11th. If it does come down to this triangle. Alright, 11th of February. So, that's all the AI payment real-world asset coins that for this speedrun session. Thanks for joining me. See you in other sessions, and I'll be back in 2026. Have a happy new year. Enjoy, if you're in your holiday, enjoy the rest of your holidays, and wish everybody a great 2026. Thanks for your support in 2025. Look forward to a better 2026 for everyone, including Aztec. Ciao.